Hey y'all, so real quick, I wanted to talk about a strategy that I like to invest with and that I often advise my clients to invest with, which is called a BEAF style deal. BEAF is the acronym. BEAF stands for break even appreciation focused. It's a strategy that we use very frequently, especially in certain markets within Texas. And the strategy here is not so much focusing on cash return on year one. It's more so focused on the long-term viability of an asset. So for BEAF style real estate, we're looking for something that's mostly turnkey in highly desirable areas. Like these are like B plus to A grade areas. They attract a B plus to an A grade tenant. So it's very high quality in terms of the asset type. And we actually look for 0% cash on cash. And now the first pushback that I get from clients at first is always going to be, well, I can make 7% in the stock market. Why would I buy something that's throwing off 0% yield? And if you're only looking at one of the financial measures of a piece of real estate, you're only looking at the cash yield potential in year one. The reason we love these 0% BEAF style deals because we buy them in areas that have a really strong upward pressure on rents, really strong upward pressure on price. There's a lot of jobs coming to the area. The population is growing. Median income is on the rise. It's got three of those really strong pillars of upward pressure in terms of appreciation. So we know in year one, yes, we expect 0% cash on cash, but this is an appreciation play, not just in terms of the asset price, but also in terms of the rents. We typically, as long as we're buying in those areas with upward pressure on population growth and median income and the number of jobs coming in, we can expect a jump of say $100 to $200 in rent after year one. So you go from $0 in cash flow to $200 a month after the first year, and you're in an A grade asset in a beautiful area that is relatively recently newly built. So those types of deals we absolutely love. And I see these BEAF style deals, they really fit a lot of my clients' portfolio. So I just wanted to give a quick video and explain why I really like those assets. And it's an asset type that I'm actively buying and is one of like the best pieces of our portfolio. The deals that we've bought that have been 0% yield in year one, but they've been in excellent A grade locations. But you look at cash on cash and it's like, this is cash flowing $17 a month, or this is cash flowing negative $22 a month. If a deal is cash flowing $20 negative a month, a lot of investors are tossing that out, right? Even though it's in a beautiful neighborhood, beautiful location, and it's gonna really be a cornerstone asset for them for a long time. Like $20 a month negative cash flow is gonna be $240 a year. And granted, like people are in different places, but if you're buying a $400,000 asset, you should be able to stomach a $240,000 or a $240 negative yield in year one. And this is, so by and large, I've seen it happen a lot where people throw out and they don't consider these BEAF grade assets because of negative yield. Pay attention to the longer term prospects of that asset. Pay attention to the growth in the area, and not just in terms of the appreciation potential of the price of that asset, but also the appreciation potential of the rents in the neighborhood. So again, BEAF style real estate, 0% cash on cash return, break even, appreciation focused. You're in great areas, in great assets that need minimal work, minimal management, minimal maintenance, and your tenants are typically of really high caliber. They pay rent on time. You're not going to have headaches. So I'm really bullish on that specific type of inventory, especially at this point in the market cycle. We're coming on the end of February and the market has definitely softened relative to where it was 8 to 9 months ago. And back in the peak of the market in say 2021 and the first half of 2022, investors didn't have access to this A grade inventory because it was trading with 15 offers on the table and a seller could pick and choose whatever offer they wanted. And often what makes a deal work for an investor is not the deal that a seller is going to pick. So now that the market has started to soften and maybe your offer is only one of two that they're considering, you've got a much better chance of getting into these really high grade type of neighborhoods and these really high grade style assets that we haven't had access to for the past 4 years. So this is a great time to focus on BEAF style real estate, 0% cash on cash return. Prices are accelerating both in terms of the rent of the asset as well as the sale price of that asset. And you'll have minimal maintenance expenses, minimal management fees. And it's just a really good strategy that I think should be heavily considered despite that one metric, cash on cash return, being 0 in the first year. It is a small price to pay for what that asset can ultimately yield down the road.